One. Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. And today, guys, I'm back with another live educational video with you guys. To help you guys understand the method that I do trade with, to help you guys, understand the market a little bit more simple. All right, because I know a lot, when you get, you got a lot of educators out here. They have their different methods and a lot of different things that they like to show you guys. But for me, I like to make a lot of things simple. I like to make my life simple. So if I like to make my life simple, right? I like to make trading simple and simple for everybody to understand, right? It's no holds bar with me, right? Everybody will be able to understand what I'm giving you guys, so that way you guys can be successful in the skill set. Because everybody's capable. All right. You just got to put in the time, right? You put in the time, good things come out of that, right? So, um, let's just go ahead and delete this, all right? And we're just going to start straight from scratch, all right? Usually I have this written down, but I'm going to do it for scratch for you guys so that way you guys can follow along, right? So get your notebooks out. Get your notebooks out. Get ready to write these things down. If this is your first time on a session with me, um, I believe you're in for a treat, all right? So with that being said, let's get straight to it, all right? I like to call my method the power of three. All right. Why I call it the power of three is because once you put these main three core values that I give you guys, right? When you put those three things together, it can become very, 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 a very, very, very profitable method. All right. So let's get straight to it. Right. The first things first, right? We have trends in the market. You have three types of trends. All right. You have an uptrend, you have a downtrend, and then you had a sideways moving market, right? A lot of people like to call them a ranging market, right? It's completely up to you what you want to call it, right? So first things first, you have your uptrend. So you have price where it creates higher highs, higher lows, higher highs, higher lows, higher highs, right? What? Higher lows. Okay. So what I want you guys to understand is that every time price creates a new high, right? In order for it to go in an uptrend, right? In order for it to be in, to call itself an uptrend, it has to break a line of structure, right? So this, let's just say this was a lower high, right? It was coming from a downtrend. It created this lower high right here. Price dropped down and created this new low. All right. In order for it to become an uptrend, all right. In order for it to become an uptrend, I want you guys to stick with me, all right? Because it's all going to come together. Once it breaks this lower high, that's identifying and letting you know that what price is looking, right, to change directions, all right, from moving from a downtrend to now moving into an uptrend. All right. So when it creates this higher high, it's always going to pull back down to what I like to call an area of value. All right. Area of value. And you have three main areas of value that you need to pay very close attention to. All right. You have three. You have an order block, right? Some people like to call it supply and demand. Then you also have a fair value gap, right? Some people also like to call it liquidity. All right. Then you have structure level, right? Some people like to call it support and resistance, right? All of those things are all the exact same thing. Okay. So when price pulls back after it creates a higher high, right? Because we're moving in the uptrend, right? It's going to reach an area of value, right? And at that area of value that it creates, right? It's going to give you, what do you think? A bullish candlestick confirmation pattern from that level. Why? Because we're in an uptrend, right? And if we're in an uptrend, the only thing that we should be doing is buying. You should not be selling. You should not be trading against the trend, right? Because the moment that you trade against the trend is the moment that you're setting yourself up for failure. Okay. We want to follow the trend. We want to go with the grain, right? We don't want to go against it, right? Because if you go against it, right, for people that know about getting your haircuts, fellas, you know about getting your haircut, right? If depending on the texture of your hair, right? Depending on the texture of your hair, if somebody goes against the grain with a clipper, right? It could be sayonara to your hair, you know what I mean? So you want to go with the trend, you want to go with the grain, right? That way everything is smooth, everything flows how it's supposed to, right? So when it creates this higher high, like I said, it's going to pull back and reach an area of value. Now, the first area of value that I'm going to identify for you, right, is a order block. All right. My order blocks are my purple zones. So if you guys see when I drop a chart, right? When I drop a chart and I drop a signal, right? And you guys see this purple zone, this is an order block. In other words, a supply and demand zone, right? In this case, because we're in an uptrend, if you don't like calling them order blocks, you can just simply call this a demand zone, right? Why are we calling it a demand zone? Because in the demand zone, right? That's where price will pull back to so it can buy from, right? We're in a demand, right? So we want more of something than we want less of anything. We want more of it. So you have your order block. All right. Let's just say, for example, when price pulled back here, right? It came to an order block. All right. Let's just say it came to an order block, right? It came right back to that order block. What do you think you want to see from this level, right? Now, here's the thing. You have three different types of candlesticks. You have bullish candlesticks, you have bearish candlesticks, and you have indecision candlesticks, right? You guys see why I call it the power of three, right? Because there's three of everything in the market, all right? No matter how you look at it, there's three of everything, okay? When price comes back here, right, we want to see a bullish candlestick close above our order block. Okay. We want to see a bullish candle close above our order block. So it'll be something like this. You get your entry, you get that candlestick that closed bullish above your order block, right? You get your entry point. Your SL will go beneath your order block, right? Let's say for 25 pips. And then we're going to say you want to shoot for what? You either want to shoot for a 1-to-1, you either want to shoot for a 1-to-2, right? Or you want to shoot for a 1-to-3. 1-to-3 is 75 pips, right? If you guys see this, you guys see how that plays a factor and price will transition. I will show you guys in real time so that way you guys see how it works. All right. I'm not just going to show you this example. I'm actually going to show you in real time as well. All right. So you got your entry, your SL will go below your order block because we know if price does drive past that point, it was meant to happen, right? You're not going to win every trade. That's just unrealistic. Nobody is. Nobody's 100%, right? Might as well just forget about that, right? So you're not going to win 100% of your trades, but making sure you put yourself in a position to win majority of your trades in a zero sum game, right? Is how you stay on top, right? And if you follow this method is always going to give you, if you've been on a session with me or anybody else or any other educator, right? They've always told you risk to reward is how you stay on top, right? Catching good trades is one thing, but you're having your risk to reward is a whole nother thing because that's what's going to keep you in the longevity game when it comes to trading. Now, if you follow this method the proper way, it's always going to give you a great risk to reward ratio, always, right? So we got a 25 pip SL, right, for a 75 pip gain. That's a 1-to-3 risk to reward ratio. And if you see here what ends up happening, price takes out that higher high, okay? Boom, boom. What does that give you? It gives you your BOS, which is your break of structure. This was a structural high, right? Price ran through that point, okay? And because price ran through that point, what do you think is going to happen next? When price creates that higher high, it's looking to pull back to find an area of value, okay? The area of value, right? Remember I told you there's three. Let's just say when price came back here, right? It found an area of fair value. All right. I will go over that as well. Your fair value gap zone is what? Mine is green, right? FVG, right? Mine is green. So when price pulled back, let's just say it pulled right back to a what? A fair value gap, right? Just like you want to see a bullish candlestick close above the order block, you will want to see a bullish candlestick close or reject off of this fair value gap, right? That's what you want to see, right? But you have to see something close above it, all right? It has to close above it. Once that happens, All right. Again, you take your entry off of that bullish candlestick with your SL below your order block, right? 30 pip SL. And we're looking for a what? 30 pips. 30, right? 30 from 30 is a 1-to-1, right? 30 to 60, that's a 1-to-2, right? And then 30 to 90, that's a 1-to-3, right? Because we're going based off of our SL, right? So whatever our SL is what our first TP will be, and then so on and so forth. Okay. So again, let's just say we want to go for a 1-to-2. All right, 60 pip gain. Look how it always puts you in a great risk reward ratio. And you guys will see this in real time. Trust me. All right. You take your entry from that bullish candlestick that closes above the fair value gap, and you're looking to take it at the high, above the high, or a little bit beneath the high. All right. That's where you want to take your trades. That's where price is aiming for. All right. Whether it's short term trends or whether it's long term trends. All right. Boom, boom. You see how that works? Now, all right, the last one. I'm gonna pull this up here just for example purposes, right? So again, right, price then does what? It takes out the what? The previous high, giving you the what? Break of structure. All right. Again, when price breaks the structure, it's looking to create a high, right? For price to retest back to where? Right? In this case, let's just say price pull back to where? Our structure level, right? Our structure level. So if we go from here to here, you see that this is our high, right? What ends up happening in the price? Price comes right back to this structural level, right? That it broke and made a what? Made a double top. And I'll go over the patterns as well. All right. So it created a double top pattern at a structural level, right? So again, what do you want to see close above these areas of value? You want to see bullish candlesticks closing above this area of value. That's what gives you the confirmation that that area of value is significant and it's strong enough to withstand whatever is going on. All right. So we take our entry, right? You could have possibly took your entry here. You probably would have had to deal with a little bit of drawdown. And again, guys, I like to be realistic. In some trades, you're going to deal with drawdown, right? You're going to deal with it. It's inevitable. No trade you get in is going to go straight into profit. So you might as well exit out that mentality out of your mind right now. All right. No trade you get in, not all of them are going to go straight into profit. That's unrealistic. And I like to be a realistic individual. Okay. So what ends up happening? Price goes into profit a little bit. It shoots back down right beneath, right towards your structural level, and then it takes off again. All right. So if this is making sense to you thus far, right? I just simply just went over the uptrend. If this has simply made sense to you thus far, right? Type of PO3 in the chat. All right. Type of PO3 in the chat if this has made sense to you thus far. All right. We got some PO3s. Good. All right. If you got any questions, if anything is not making sense to you right now, right? Type of one in the chat. Type of one. If it's not making sense to you, right? Type of one. All right. If I don't get no ones, all right. So, all right. I didn't get anything. So we're good, right? Everybody's following along. So now, all right. We went over the uptrend. All right. Now let's go over the uptrend patterns. All right. Let's see here. You have what we like to call, right, a symmetrical. Let me delete that. Right. You got a symmetrical triangle. Right. That can go either way. All right. A symmetrical triangle can go either way. Right. Once you get a symmetrical triangle at a structural level, right? So, okay, hold on. BOS is simply just breakup structure, right? What breakup structure is when price creates a high and price runs past that level. That's what makes it, a break of structure. That's it. There's no loop behind it, anything. Once price breaks a high, that's considered a break of structure. That's all that is. All right. Now I'm gonna just go back to your symmetrical triangle, right? Price can either get into the symmetrical triangle and move bullish, or I can get into the symmetrical triangle, right, and move to the downside. All right. But here are the bullish patterns, or like that I like to go over as well. All right. You have a double what? Double bottom, right? You will get these double bottoms, right? You'll get this double bottom at the start of an uptrend, right? You'll get it at the start of an uptrend, or you can get it as a continuation. You guys see that there. All right. You can get it at the start of an uptrend or as a continuation within a trend. So if you see this pattern being created within a trend, that's letting you know, right? More times than not, price is looking to head back to the upside. All right. Then you have your double, your triple bottom. All right. Your triple bottom, right? Price hit the same level three times. Again, you will get this pattern at the start of an uptrend. All right. Or as sometimes as a continuation. All right. Double bottom, triple bottom. All right. The last one, right? The last one that's significant that you will normally see in the market, right? All of these is some that you will normally see in the market is called your head, your inverted head and shoulders pattern. All right. Again, you will get this pattern at the start of an uptrend, right? Or sometimes as continuation. All right. So these are your three main, right? Uptrend patterns: double bottom, triple bottom, inverted head and shoulders. All right. Got that? Let's get rid of that symmetrical triangle and we're going to slide these all the way over. All right. So I went over the uptrend. Now, here's the market in itself. Whatever happens on one side will happen on another. And I know you guys heard that before. Whatever happens on one side can simply happen on another side. Okay? So if we're looking at this, right, we went over the uptrend, we went over those patterns, right? Now let's go over the downtrend. All right. Let's go over the downtrend. Now, if we're in a downtrend, what should we be doing, guys? Right? Let's use our common sense, right? What do you think we should be doing if we're in a downtrend? Right? Type it in the chat and tell me what you think we should be doing if we're in a downtrend. Should we be buying or should we be selling? And please make sure your mic is muted. Right? We should be selling. At no point should we be buying in an uptrend. At no point whatsoever. All right. So again, you have, instead of it being higher highs and higher lows, now it's lower lows and lower highs, lower lows and lower highs, right? Lower lows, lower highs, lower lows. You guys see that? All right. So you got your lower low here and your lower high here. Those same three areas of value that you had on the bullish trend will be the same areas of value that you would have on the downtrend. So, for example, all right, and again, how are you able to identify? How are you able to know, right, that price is going to move into a downtrend? How do you know that? Well, it has to take out a higher low, right? It has to take out a higher low. It has to. All right. In order for a downtrend to commence, it has to take out an higher low to give you the what? Break of structure. Okay. The moment that price breaks past that higher low, we're looking for price to create a new low to then retest back to one of our three areas of value. One of our three areas of value. All right. let's just say in this case, when price pulled back to this lower high level, right, it made a fair value gap, right? It came right back to a fair value gap, right? Instead of seeing bullish candles, we want to see bearish candles close beneath our areas of value. That's what we want to see, right? We want to see bearish candles closing beneath our areas of value. In that case, if that happens, right? And this is why I want you guys, I'm not going to go over the candlesticks with you, right? Because I want you to go do that. That's the homework that I got for you that I got for you guys. I want you to go over the candlesticks always and forever, right? Because I want you to get them ingrained in your head so that when you see them at these areas of value, you know when to take action. All right. So boom, you take your entry there. Let's say we had a bearish candlestick close, right? The same exact way. Let's say, okay, we have a 30 pip SL, which means we're gonna have a 30 pip take profit or a 60 pip take profit, right? Or a 90 pip take profit. It's completely up to you, right? If you want to go for a 1-on-1, or you want to go for a 1-on-2, or you want to go for a 1-to-3, it's completely up to you. All right. Let's just say we go for a 1-to-2 risk to reward ratio, right? It's always, like I showed you guys, it's always going to play as a great risk to reward factor if you follow the method the proper way. All right. So again, price took out that lower low, right? Gives you the what? Break of structure. All right. And it created that new low. Now, when price decided to pull back, right? When price decided to pull back, it created something that we like to call, right, a double top. All right. Just like you have the, excuse me, right? Just like you have the double bottom, you also have the double top. All right. So what happened? Price created that new low and let's just say at an order block, right? Let's say at an order block, it created a double top, right? What we want to see again is bearish candles closing beneath our areas of value, right? So we can catch our entry from these points, right? With our SL where above our areas of value, and we're aiming towards the lows, right? You either aiming towards the low, at the low, or below the low. All right. Everybody got that. All right. Then what happens? Right? Price break structure gives you your break of structure, right? Where can we say price pull back to? Right? Is this not a structural level? It is. It was a previous low, which makes it a structural level. All right. So from here to here, right? Boom, boom. Let's just say that was a structural point in the market. All right. Price made that lower low, price pull back to that structural level. And all we want to see, right, is a bearish candle close below that structural level, a strong enough one. We don't want to see any weak ones. We want to see strong candlesticks closing right above or below that level. All right. Again, you have your SLs above your areas of value, and you're aiming either to the low, below the low, or a little bit above it. All right. But in this case, you can go below the low. And as you see, price played out as it should. Right. Of course, it's an example, but I will show you now after I go over these patterns with you guys. Right. You have your double top. Right. That starts a what? That starts a downtrend. Right. Then you have your triple top. All right. Boom, 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 boom. Right? Your triple top. Is it always going to look pretty? No. That's something that you also going to have to study, right? Screen time is what's going to have you being able to look at these patterns in the market and find them right cleanly. If you practice, if you have a lot of screen time, a lot of these shapes that I'm showing you, right, will start to appear and you'll actually see them come in the market. All right. So boom, you have your double top, your triple top, and then you have what? Your head and shoulders pattern. Not your inverted head and shoulders. You have your head and shoulders pattern. All right. right? And that's how it looks, guys. All right, put it into perspective. This is what moves the market, right? Candlesticks move the market in itself. Once you understand the candlesticks, once you understand the structural points of the market, right? You got it. You got it. Right? It's about then you working on your psychology. That's the main thing that keeps people from being successful in this skill set is their psychology, right? You have to have a very very strong mental when you get to these charts, and you cannot, right? If you're going through something personal in your life, right? If you're going through something personal in your life, I will highly suggest you do not step, you do not even open your computer or open your phone to look at the charts whatsoever, right? Because it's going to deter you from what you think you're seeing, right? But you're not really seeing because you're dealing with a lot of other things in your head. Okay, so boom, I went over this example. You guys can take a picture of this if you very well much so please. All right, because these are the main things right here. Okay. All right, everybody good? Everybody good? If you're good, type PO3 in the chat. All right, now we're going to move to the real-time charts, and I'm going to show you guys the same exact method, right? Even on the 30-minute time frame. All right, it doesn't matter what time frame you do it on. If you follow the structural points of the market, right, all of this is going to make sense. Trust me. All right, I've been doing this for a very long time now, right? Well, not too long, but I've been doing it for a long time, long enough to understand, right? Um, the method and how the market operates. So, all right, we're on the 30-minute time frame, right? Let's just put this into perspective, man. All right. All right, boom. We can come here. Can anybody tell me what trend this is? Mind you, we're on a 30-minute time frame now. All right. Can anybody tell me what trend the market is moving in here? Right. Everybody should get this answer correct. Right. What trend is this? Uptrend. So if this is an uptrend, what should we be doing? Right? We should be buying. That's it. We should be buying. We should be worrying about anything else but buying. Finding areas to buy from. Okay. So all right. Let's say we come here, right? All right. We come to the market, right? We know that this is an overall uptrend, right? I'm about to put this into perspective for you guys, right? This is it's about to click in just a second. It's about to click. All right. So remember how I told you guys, right? How uptrends start from double bottoms. And if you pay attention here, this is a double bottom. Is it pretty how I drew it? No. But you have the double bottom here. All right. Boom, right? Boom, boom. All right, you got your double bottom, right? Price broke the neckline and price took off. Is this enough to let us know that this is an uptrend? No, it's not. Why? Okay, give me 1 second. I'll answer your question. Sorry. Right? Why is this not? Why is it not? No, it's not letting you know now that it's an uptrend yet until it does what? Until it breaks a lower high. Okay? Until it breaks a lower high. All right. Price did eventually break this lower high, giving us the break of structure, right? Your BOS. All right. Then what did price do? Let's just take a look at this. This is a structural point in the market, right? Price broke that structural point in the market, creating a new high. What did price end up doing? Price end up coming right back to this structural point in the market, right? From wick to body, right? From wick to body is your structural level. If you drag that across, right? And we see how price is respecting this level, right? We see how price is doing what? It's closing above this level multiple times, right? It's closing above this level multiple times. So, right, if it's a little bit too much choppy for you, right, you want to wait for that strong, strong, strong candle, right, that identifies that it is going to respect this level. So we could have entered the market here, right, with our SLs where, right, normally, right, at minimum, my SLs, at minimum, my SLs for me personally, right, will be at like 30 to 35 pips, right, at minimum, right? So we can go, let's just say we go for, let's say we go for a 25 pip SL, right? You got your 25 pip SL, right? Mind you, we're on a 30-minute time frame on USD CAD. You got your entry point. If you wanted to go higher, you could for your SL, right? For a 20 pip SL, right? You go for a 20 pip gain. And if you see that price, what ends up happening to price? You got your entry point here. Price goes into a drawdown, right? But you're giving your trade room to breathe. All right. What ends up happening to price? Price ends up changing directions, right? And respecting, right? Respecting this structural level, right? It goes up and it takes out your 1-to-1 risk to reward ratio. If you want to go for a 1 to 2, a 1 to 2 is 40 pips, right? 40 pips. What ends up happening? Price goes and it takes it out, right? Boom. You move to the next one. What ends up happening? Right? Price ends up taking out this higher high, right? You get your break of structure, right? And then price creates that new high. What does it retest back to? Well, Gary, I don't know. Well, I'm about to show you, right? I'm about to show you right now where price retest back to. It already retests right back to the structural level. That's number one, right? But here's the second level that it retested to, which was an order block. Gary, what's an order block? How are you able to identify a bullish order block? Well, it's the deepest last down candle before price breaks structure. All right. So in this case, it's this entire selling candle. All right, from here to here. That gives you your order block. All right. And if you see we have a strong rejection off of that order block and we got a bullish candle closing above our order block. So what do you think we want to do? We will take our buy entry here. We'll put our SL beneath our area of value, right? And then we'll look to go past our high or above our high, right? And if you see what ends up happening in the price, right? Takes out your higher high, price hits your take profit, you go about your day, right? Uh, say 1 to 1 is 15 pips, right? Boom. All right, 15 pips, you made your money, you go about your day. Okay? What ends up happening? Price takes out this next higher high. Look at this, guys. Higher high is taken out, it breaks structure, right? Creates that new high. Where does price retest back to? Right? Again, we want to find a deep last down candle before price actually broke structure. So this entire selling candle right here, right, is an order block. All right. That is an order block. From wick to wick, right, plays as an order block. As you see here, price tap that order block, and then what does it end up doing? Ends up taking off, right? Does that make sense thus far? Everything that I just explained on this chart, did it make sense? If it made sense, type a 3 in the chat. Type of PO3 in the chat. I'm sorry. Type of PO3 in the chat if it made sense. Right? Everything that I just went over with you guys, if it's clicking, if it's making sense, I promise to you guys, this is how the market operates. Right? I kid you not. I kid you not. This is how the market operates. Are you gonna win every time? No. All All right, you're not going to win every time. You are going to have some losing trades, right? But are you going to win majority of the time? Answer that question, right? A good majority of the time you're going to win your trades, right? A good majority of the times, but you are going to have those losses, right? You're going to have those lessons, and some of those lessons are going to come from you being impatient. Some of those lessons are going to be you not taking, you not taking the trade when you're supposed to take the trade originally, right? Sometimes you may deal with, taking those L's, all right? That may happen. But I just sat here and I just explained basically the uptrend to you guys and how it's supposed to be operated. Is it pretty looking? No, it's not pretty looking, right? But let's just go to a whole nother let's go to a whole nother let's go to a whole nother let's go to a whole nother pair. Right? Let's go to a whole nother pair and we're gonna go over to the downtrend. All right. This is gold. All right. Let's find a good downtrend. All right. Let's find a good downtrend that we can go over. Right? Is it always going to be pretty? No, man. I'm telling you that now. It's not always going to be pretty. These two order blocks colors, right? My different if it's different colors, they're different things. So you got a purple zone, which is the order block. Then you have a green zone, which is the fair value gap. I like to color code my things, right? I don't like to. I'm very neat. I'm a neat freak at heart, right? So a lot of my stuff is very organized. I don't like having a bunch of clutter, but different colors means it's a different area of value. That's all. All right. But like I said, let's go and find a downtrend. All right. All right, we can go to this one here. All right, this one's cool. All right. All right, everybody know, right? Everybody should already know because I already said I was trying to find, right? But can anybody identify and tell me which trend this is? Right? What trend do we have here? Downtrend, 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 downtrend. So what should we be doing? Selling. Sell, 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 sell. That's it. We're not doing nothing else. Nothing else. All right. How are you able to identify a downtrend? Right? Again, price is going to most of the time be coming from an uptrend in order to start a downtrend, right? But here's the thing, right? What is this, right? Can anybody identify what this is to me right here? Right? You can see it as one thing, but you can also see it as something else, right? From here to here, right? To here, what do you have? Can anybody tell me what this pattern is? Right? We have a head and shoulders. Good, right? Right? It's basically the head and shoulders pattern. Shoulder, head, shoulder, right? Now, if you was to get rid of this one, what do we have here? A double top, right? That's forms of indication to let us know that price wants to move to the downside. So the moment that price took out this higher low, right? The moment that price took out the higher low, that gives us a what? The breaker structure to let us know that price is looking to transition to go into a what? A downtrend. All right. So what do you end up getting? You got your lower low that was created, right? What ends up happening in the price? Price pulled back. But what did price pull back to? It pulled back to a structural level in the market, right? From this wick to the body, right? If we drag this all the way across, right? We see how that can be a what? Structural level. Price stopped at this point and took off. Price stopped at this point and took off. Right? So the moment that price breaks this structure and creates this what? Lower low, it pulled right back to a structural level. And again, what do you want to see? You want to see Bearish candles closing beneath the structural level, right? The moment you see bearish candles closing beneath the structural level, right? You place your SL above, right? And you're looking for what? At least a 1 to 1, or you can go for a 1 to 2. It's completely up to you, right? It's your trading account, it's your money, whatever you feel like you want to do, right? Once you got this method down, that's what you can do. No ifs, ands, or buts about it. All right. Nobody can stop you. Okay. Um, so boom, we enter off of this candlestick, right? This candlestick right here. Price goes into what? Draw down a little bit, and then it eventually takes out our 1 to 2 risk to reward ratio, right? Then what do you end up getting? Price breaks that lower low like it did, right? Gave you the breaker structure. So when it created that new low, what did price end up doing? Price pulled right back up to where? Right? It pulled right back up near this structural level again. And it gave you a fake out, right? If somebody seen this candle naturally, they probably would have thought price is probably going to, excuse me, continue to go higher, right? If they would have seen this, they were like, oh man, price is finna buy, blah, 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 right? Sometimes that's not the case. What ends up happening to price, this is what you call true price action, right? If you get a candlestick that closes above a structural level or even an area of value, right? And then it transitions and turns right back around and close beneath it. That's what true price action is. Okay. If you ever heard the word price action, that is what true price action is right there. Right. That's terms for letting you know that price wants to go back down to the downside. All right. So if I would have seen this, me personally, right, I would have called my entry here, right? My SL would have been above that bullish candle. And then I would have looked to aim towards my low. And as you see, we're always setting ourselves up to have a great risk reward ratio. If you notice one thing about this pattern, I mean one thing about this trade right here, right? Is that price went from being in profit, went to being in negative, went to being in profit, went to being in negative, right? This is where your patience come into play. All right, trusting your analysis, trusting the method in itself, right? What ends up happening? Price, transition starts to consolidate a little bit and then it eventually drops. All right, you win your trade, you go about your day. It's no need to trade again. You made your money, right? You're done. Okay? You made your money. Price ends up doing what? Creating equal lows in a sense, right? If you look at it like this, right? What are equal lows? Equal lows are created in the market to be broken, right? Same as equal highs. So if you got 2 points, two equal lows at this particular point, right? And naturally, the moment that a candle either wicks below a lower low or close below a lower low, that's letting you know that price is looking to eventually go past that level again, right? Whether it's quickly or it takes a little while. What ends up happening? Price pulls back, right? But where does price pull back to? Again, right back towards this structural level. You got a candle that closed above. This candle went a little bit above it and did what? Closed right back up below. This is the candle we would have entered off of, right? We would have got our entry right here. Our SL would have been above our area of value, and we would have been aiming below our equal lows. And if you guys see that, money is made. You can go about your day. Okay? All right, everybody got it? If this has made sense to you thus far, guys, like if this has made sense to you thus far, type a PO3 in the chat or in the comment section. If this is something very, very, very simplistic, it's not difficult to understand, right? This is the way that I figured out that everybody has the ability to be able to get on the charts and be successful at this skill set, right? Trading is life, guys, right? At the end of the day, trading is life. right? You're going to take some lessons, you're going to take some losses, right? But it's all about putting in the one foot in front of the next and making, becoming 1% better every day, becoming a better version of yourself every day, right? And if you know you have things to work on, right? Trading is gonna throw those things in your face, right? It's gonna throw those very very things in your face that you have to fix in order to be a better individual. Okay, right? So if you're not a patient individual, trading will make you patient. If you're not disciplined, trading will make you disciplined, right? If you have a sense of greed, trading will take away your greed, right? It'll take away all the necessary things that need to be taken out of your life in order for you to be the person that God intended for you to be, right? Or your higher source, whatever you worship, right? And hopefully it's all good. You know what I mean? But it's going to make you stand 10 toes down and work on the very things that keep you from moving to the next phase of your life. All right? But that's the method in itself. Those are the things that I look for. And this is the way that I trade. This is the way that I call signals. I've been able to grow small amounts of money to big amounts of money. I'm able to grow big amounts of money to even bigger amounts of money. I've done it before, right? Triple t- so many times over, triple times over, so many times over, 5 times over. I've done it continuously before. You know what I'm saying? So I know that this method works, right? All you have to do now is go study these things, go back, look over the very things that you need to look over in order for it to attack the market like you're supposed to. All right. I'm gonna give you guys one more example right here, right? I'm gonna delete this, and I'm gonna delete this, right? What do you end up getting here? You get your new lower low, right? Right? You got your new lower low. Where did price pull back to? Right? This was a break of structure in itself, right? This is the last one I'm gonna go over, and then we'll be done for the day. All right. But I do want you guys to stick around. All right. What do you end up getting? You got the break of structure. Price creates that new low, right? And then where does price pull back to? Right? What are bearish order blocks? What are bearish order blocks? It's the last up candle before price breaks structure. So, right, if that's the case, this is the last up candle before price went down to break structure. So, how is it drawing? From wick to wick of that buying candle. If we drag price up, right? If we drag our zone across, I'm sorry, right? We drag our zone across. All we need to see is a bearish candlestick close below this level. That's all we need to see. All right. You take your entry, right? If I would have seen this, to be quite frank, to be quite honest with you guys, if I would have seen this bearish candle close below, I probably would have got in here with my SL above this level, right? With a 75 pip SL for a 75 pip gain or more. Because I knew it's going towards that low, right? One way or another. Okay. Everybody got that? Everybody see that, right? All right. Guys, that's it. That is it. That's it. That's the power of three method. That's the way that I trade. That's the way that I attack the markets every time I get on the market. All right, win or lose, but I win a lot more times than I do lose. All right, so um, again, I would like to say this, right? Um, nothing is, like I said, nothing is guaranteed, but this method has put me in a position to be on top more than on the bottom. All right. So guys, I appreciate you guys for getting on this session with me. I'll see you guys on the next session. I love you guys. If you want to tag along with me, if you want to follow me on my social media pages, my social media is Gary Scott Official, right? My YouTube is the Silent Pip Assassin, the Silent Pip Assassin. All right, that is my YouTube channel. If you guys want to go back and check out some of my videos that I do have on there, you're able to do so. All right. So with that being said, guys, I appreciate you guys for getting on. It's your boy, Gary Scott. I'm out of here. Peace.